Can the Reliance Nippon Life Nishchit Samrudhi plan assure you guaranteed returns for your long-term financial goals? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So now before analyzing this policy, let us first understand, is this policy worth investing or not, by having a basic understanding about it first. So this is a non-linked, non-participating individual savings life insurance plan, and some of the key features of this policy are: you get life insurance coverage throughout your policy term, which ensures financial security for your family, and there are flexible premium payment options which you can choose to pay for 5, 8, 10 or even 12 years. And there are growing benefits in this policy to match your increasing financial needs over time. And the flexi wallet feature in this policy allows you to withdraw income whenever required. And there are tax advantages which can be subjected to current tax laws. And the long-term guaranteed returns of this policy extends up to 44 years. So these are some of the key features of this policy. Now let's take a look at the benefits available under this policy. So there are three kinds of benefits. Number one is the death benefit, which the nominee or the legal heir gets in the case of unfortunate death of the life insured. So the death benefit would be the sum assured on death, which is 11 times the annualized premium, or the death benefit factor multiplied by total premium paid as on the date of death of the life insured. So out of these two options, whichever is higher in value at the time of death of the policyholder, that will be given as a death benefit to the nominee or the legal heir. So apart from these two options, the claimant can also receive outstanding balance in the flexi wallet if they had any. And the survival benefit is the guaranteed annual income GAI, which shall be payable on survival of the life assured at the end of every policy year during the income period. So the GAI at the start of the income period shall be equal to the GAI rate multiplied by the annualized premium, and the GAI shall increase every year at a simple rate of 5% per annum. And the maturity benefit of the policy is that once the policy matures, the policyholder will get the sum assured on maturity, plus if they had any outstanding balance in the flexi wallet, they also will get along the maturity benefit. Whereas the sum assured on maturity here is defined as an amount equal to the annualized premium, which is multiplied by the premium payment term. So these are some of the benefits available under this policy. Now let's take a look at the advantages and disadvantages of this policy. So the advantages are: you have the option to accumulate the guaranteed annual income in the flexi wallet rather than receiving it as a periodic payment during the income period. So another advantage is, under the settlement option, you can leave the maturity benefit in the flexi wallet along with the outstanding amount in the flexi wallet. The next up is the loan facilities available under this policy up to 70% of your surrender value, and riders can also be added to your base policy to boost your coverage. And the higher premium band in this policy offers a higher guaranteed annual income GAI. So these are some of the advantages. The disadvantages would be the survival benefit a policyholder usually often gets spent on discretionary expenses. This insurance product offers you relatively low returns, and the annual withdrawal from survival benefit interrupt the compounding effect. So these are some of the disadvantages of this policy. Now, as we have a basic understanding of this policy, let us now move on to the analysis part of the video, where we are going to analyze the IRR, internal rate of return, using the figures provided in the policy brochure to see whether the returns we get from this policy is worth investing for or not. So let us assume, just for calculation purpose, that a 45-year-old male chooses the RNR Nishchit Samrudhi Plus plan with an annual premium of 5 lakhs. So the premium payment term here is 10 years, followed by a 2-year deferment period and a 30-year income period, resulting in a total policy term of 42 years. So after completing the premium payment and the deferment period, the survival benefit begin increasing by 5% per annum, which is simple interest every year. So the first survival benefit is 3.78 lakhs, and at the age of 87, the policyholder receives the final survival benefit along with the maturity benefit. So if you calculate the IRR for this cash flow using the Reliance Nippon Life Nish Samrudhi Plus Plan maturity calculator, the IRR is calculated at 6.51%. So while this return may seem comparable to or even slightly lower than that of debt instrument, it is not competitive for such a long-term investment, especially when you account inflation. So given the 42-year policy term, the return falls short of what one might expect for achieving their long-term financial goals. So the analysis here highlights the importance of evaluating potential returns before committing your savings to a financial product, especially to an investment cum insurance policy. So in the case of Reliance Nish Samrudhi Plus Plan, the plan does not deliver returns that adequately meet long-term financial objectives of any policy holder. So now, as this policy is not giving us a desirable outcome we expected, what we are going to do next is going to conduct a comparative analysis where we are going to compare the calculated returns with alternative investment products that can help us determine whether investing in the RNL Nisht Samruddhi Plus plan is the right choice or not. For this comparison, we are going to use the same parameters as in the previous example. So while this plan does offer both life insurance and investment opportunities, we are going to see whether investing in insurance and investment separately in this comparative analysis can fetch us better returns compared to this policy. So just for example purpose, let us assume that we have chosen a pure term life insurance policy for life coverage with a 75 lakh sum assured, which has an annual premium of 1 lakh 1000 rupees for a 40-year policy term and a 10-year premium payment period. This leaves you with 3,99,000 each year, which can be invested according to your risk preference. So if you are a low risk investor, you may prefer debt instruments like the Public Provident Fund PPF, while if you are a high risk investor, you could opt for equity based products such as equity linked savings scheme ELSS, which is also a tax saving product. But in this comparison specifically, we have chosen the combination of term insurance plus ELSS mutual fund, because if you take a look at the track record of ELSS mutual fund as well, you will see that if you choose to invest in it consistently for 7 to 10 years, it has also outperformed in certain cases where it has gone and performed beyond the average 12% return as well. So according to the track record and all, we have chosen ELSS for high risk investor and only included that comparison in this example. So if you take a look at the combination of term insurance plus ELSS, you can see by the end of the term, the ELSS fund would have accumulated 1.10 crores, which is pre-tax. So after deducting the capital gains tax, the post-tax value of this combination is 1.01 crores. So the amount is then reinvested in a product yielding 7% return, which enables annual withdrawal similar to the RNL Nisht Samruddhi Plus plan. So at the end of the term, the full investment is withdrawn to match the maturity benefit of the RNL Nisht Samruddhi Plus plan. So the final maturity value in this alternative approach amounts to 2 crore rupees, nearly 3 times the maturity value offered by the RNL Nisht Samruddhi plan. So the IRR for this scenario is 7.49%. So if you choose to avoid annual withdrawal, the returns could be even higher. So you also retain complete flexibility to withdraw or reinvest based on your financial needs or adapt to the changing interest rate conditions. So the relatively low return of the RNL Nisht Samruddhi Plus plan is a key drawback to investing in that policy, largely due to the combination of insurance and investment in one plan. But as you can see, separating the two can lead to better returns and more flexibility. So now what is the final verdict on the RNL Nisht Samruddhi Plus plan? Is it worth investing or not? As you can see, this is a traditional endowment plan that offers flexibility to customize benefits based on your financial needs, while the survival and maturity benefit are guaranteed and can be withdrawn when unnecessary. The plan's overall appeal for investment is limited, besides the flexi benefit feature. So the return analysis in this video shows us that this plan falls short as a long-term investment option. Annual withdrawal hinder the compound compounding effect resulting in lower returns. Additionally, the survival benefit may not be substantial enough to cover significant expenses and could end up being spent on non essential items, and also it has a high agent commission. So, what is a better approach? A better approach is to building a flexible investment portfolio, which is to invest separately without combining it with life insurance. For life cover, you can choose a pure term insurance policy which offers you high coverage even at affordable premium, providing genuine financial protection for your family and building a diversified investment portfolio according to your risk tolerance. So, this approach can definitely give you better returns and a better flexibility and liquidity in the long run. If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.